Hello there, this is Bruce at Fleet Capital Management. It's Friday afternoon, the 17th day of January 2025. Market is closed. Just a reminder that Monday coming up, the market will also be closed. I believe it's for Martin Luther King Day. But I want to show you some pretty significant changes to the technicals on the chart, and we're going to go through a number of things I think you might find interesting. The video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell a security. You know that I'm always available. Bruce at Fleet Capital Management. So first, I presented this last week. If you saw last week's video, and I hope you did, Bitcoin has proven itself. I'm not going to go through all the slides on this, but Bitcoin is here to stay, in my opinion. And just getting bigger and bigger and bigger because of new and more institutions using it as an absolute asset class in their portfolios. And that's even aside from the fact that Trump and Elon Musk have said they would like to build a reserve of Bitcoin, a national reserve. And I believe that other countries are already doing the same thing or beginning to do the same thing. So there's a lot of upside for Bitcoin. I understand how volatile it is. It's a high risk asset, lots of volatility. But what I've decided to do is for those of you who are not trading the regular Bitcoin ETF, which is the symbol IBIT, IBIT, that one has lots of volatility, lots of potential, but also lots of volatility. So for those of you who are not trading IBIT with me, I plan on adding this ETF, which is based on Bitcoin, into portfolios. I'm going to be doing that soon, next week. And remember that this is 100% downside protected. So you really don't have any risk to the downside. And you may make 9 or 10% on the upside, and we may make it fairly quickly if the price of Bitcoin moves as rapidly as it has been. So you will see this added to your portfolio. I believe it will be on Tuesday that they will be accepting orders. This is over in Calamos. So I will be putting in all of the orders on Tuesday, and I believe it starts trading on Wednesday. I might be off by a day, but I'll obviously I'll be in touch with them, and we'll take care of this for you. If you have any questions about that, just let me know. But I think that's going to be a really good addition to portfolios. There is another downside protected portfolio that has just recently come out, also by Calamos. You know that we can have these downside protected portfolios based on the S&P, and they are 12-month maturities, and they have zero risk to the downside, and they have some level of an upside cap to the upside. Well, instead of just buying one, because they come out once a month, they've just issued a new ETF that buys all of them. It buys all 12. So there are 12 different series, if you will. They come out every month. And with one symbol now, we can have exposure to all 12. And then when the 12th one falls off, meaning at the 13th month, we add a new one. And then when the next one falls off, we add a new one. And what that does, and what this slide I'm showing you here is, if you look at this line, it's a little bit faint, but if you look at this line going all the way through, this is the new ETF that they offer that combines all 12. It's called laddered because they're laddering one each month. And if you look at the S&P, which is the I don't know what color this is, kind of an aqua color is what I'm going to call that one. The S&P in 2022, and here's some dates up here, obviously was in a really bad bear market, and it started to come back up. But you can see how the smoothness of this line continued even during that bear market. Yes, it went down 1%, 1.5%, and that'll happen. That'll happen only during the first 12 months. After that, it won't go down that much. And then it just continues to smooth. But the other thing I would mention to you is these other colors are like this was the July that they brought out. That's in that kind of that red color. And this color was October and April. And so we can either buy the individual ones, and some do better than others, and caps change from month to month based on interest rates. Or we can buy the laddered program, which just continues on and owns all 12. I think I've been doing a lot of studying on this, and I think that this is a better way to go. And as a matter of fact, and you might be surprised to hear this, I'm going to add 10% of this particular investment into my growth portfolios, which are groups 1 and 2. And let me show you why. I had Calamos do some analysis for me, and this looks a little messy, but let me explain it to you. This is called a scatter plot. And here is the S&P 500, both its return and its level of risk. So risk is along the bottom and return is along the side axis. And this is over 3 years. We always do 3 years when we build scatter plots. And what I asked the researchers at Calamos to do was, what if I had a 10% position in the laddered portfolio of those S&P 100% downside protected ETFs? What if I had a 20% allocation? And then here's the individual ones. I wanted to see how it would have done compared to the individual securities that make up this ladder. And what you'll see that over 3 years, and granted, this is a little bit skewed because 3 years ago we were in a bear market. And of course, these downside protected portfolios will do better in a bear market. But the bottom line is, if you go to the left of the S&P, that means you are reducing risk of the S&P. And we measure that by something called standard deviation. So the further to the left, and we go here, that's a pretty significant decrease in risk exposure based on the standard deviation. And if we go up from that line to the 10% laddered, meaning 10% and 90% is just in the S&P or stocks and things like that, what it did over that period of time is it actually lowered the risk of the growth portfolio and slightly increased the rate of return of the growth portfolio. So pretty interesting. I am about 90% sure I'm going to add this to Group 1 and Group 2 accounts. It will probably take place next week. I'm waiting for a couple of additional pieces of research that they are doing for me. But when you see this in your portfolio, feel free to ask. Another benefit of this ladder, now this won't matter if it's an IRA, but if you have a taxable account, we defer all taxes on this particular investment until we sell, until we decide to take money out of it. And if we keep money in it for 1 year and 1 day, when we do take money out, that converts to long-term capital gains, which is basically the least expensive tax we can pay on securities. It averages about 15%, sometimes less, depending on income levels. So you're going to see me add this to the portfolio for Group 1 and 2. You're going to see me add the Bitcoin downside protected ETF to groups 1, 2, and 3, as long as you're not already participating in the regular Bitcoin ETF, because to have both makes absolutely, it doesn't make any sense to do that statistically. Okay, I hope that makes some sense. And I'll talk about this more as we go forward, and especially as I receive additional research that their firm is working on for me. I should have that on Tuesday or Wednesday. But this is an interesting thing. I'll talk about Group 1 and 2, what else I'm going to be doing next week because of the technicals, but we'll get there in just a minute. No matter how good things look from time to time, you always need to know whether the market's going up or down, and you always need to be in risk management mode. I really believe that those are the two most important rules in investment management. So let's go over to our matrix that we update every day. This was updated today. And what you will see is we've been red on the dailies. This is the S&P daily, or mixed, but mostly red for quite a period of time now. It started in December 10th. It started to deteriorate, and it's been a difficult month or so. Today, we got both of our indicators on the daily basis back to the green. So volume, on balance volume, and MACD, and I'll show you both of those. That's volume and momentum. Remember what I've told you, that there are only two leading indicators, volume and momentum. Both of those are now in an up configuration. The daily moving averages, the 3 has crossed above the 20 or 21, but there's a caveat, which I'll get to with that. But the reality is the 3 is above the 20. On the weekly basis, where we were red, we've now gone mixed on the MACD, and we're still down on the 2 over the 10. And I'll show you all of this on the chart. But getting back into the market, we generally use the daily. Getting out of the market, we generally use the weekly. Now, this column is our moving average stack that I call it. And a perfectly bullish configuration is the 3-day moving average is above the 20, which is above the 50, which is above the 200. When the 20 moving average goes above the 3 moving average, we're in a pullback, and that's what this color is here. When the 50 goes above the 20, we're in a correction. And as a matter of fact, we did go into a correction last week. I think it's going to be very short-lived, but we did go into a correction, and I will show you that on the chart. One of the most important things on here is our bear market avoidance indicator, and it's not even close. We are fully green, and that's not a problem. On the fear index, or the volatility index, known as the VIX, we have gone back into a really sweet range. We're just about 16. 17 and under is the best thing that we can see for the VIX. So even though this may not look perfect, it's looking a heck of a lot better than it did. So let me show you. The weekly chart is on the right-hand side, and what that means is each one of these bars represents 1 week of trading, the calendar week. And on the left-hand side, each bar represents 1 day. Okay, so we're going to start on this left-hand side for a moment, because I really want to show you what happened here. The white line is that 3-day moving average. It's just a very, very fast moving average that I use for trading, if you will. The blue is the 20-day, and the gold is the 50-day. So when the 20-day crosses below the 50-day, which happened this week, that, if I come back to here, is what happened and why it's this color, and that is in fact a correction. And corrections happen 3 or 4 times a year. We don't like them. This was a pretty nasty little drop, but it did cause a correction. But at the same time, the 3 is now back above the blue, or the 20, which is a very important measurement that I do here, the 3 and the 20. So a little bit of mixed information, but if we add some other things, here's volume. On balance volume is green, more buyers than sellers. That's critical. The moving average, the MACD, which is momentum, just went green. If you see that, that just happened today. The combination of those two metrics tends to suggest that there's a lot more upside ahead. Also, the VIX being below 17, that's another data point that is really strong. The 3 days above the 20, that's good. Here are the negatives. The negatives are the 20 is still below the 50. I don't like that very much. Another negative is this is another type of volume indicator, is still red, but getting ready to cross up. That could cross up anytime. But those are negatives if I read negatives. Another positive is I had drawn a trend line from the last high, and look at how many times the market went up to that high. I would say it's about 4 times. And the reason we do that is I was looking for prices to break above the trend line. So as long as they're down here below the trend line, we're in a downtrend. Once it breaks that trend, this could be the beginning of a new uptrend. One other thing that I'm not crazy about on this chart, just so you can understand what I'm seeing, is if we look at today's bar opened with that little tiny hash mark to the left. That's always the open, and the little tiny hash mark to the right is always where price closed. And you can see it had gone up higher during the day, and price had gone down lower during the day. But we pretty much closed where we opened. We were 1% above the previous day, which is a very good sign, but we didn't get too much movement in here. So the bottom line is I'm seeing lots of things that are positive, but I am a little cautious because I'm seeing a few mixed signals. On the weekly chart, the white line is that 2-week moving average. You can barely see. They're just about kissing with the blue line, which is the 10-week moving average. One decent day, it'll be above that. So that is a very good sign. The OBV, or on balance volume, it's hard to see, but it just turned green again. So I'm seeing some positive things on that chart as well. And what all this means is, aside from what I've already talked about, the Bitcoin ETF that I'm going to put in client accounts, the laddered S&P that I'm going to put in group 1 and 2 accounts, aside from all that, we pretty much have permission to start adding quite a number of stocks and ETFs to the growth accounts, to the group 1 and 2. And I will be doing that next week, quite a bit. I want to see this hold above that trend line. That's important. I really don't want to see it drop back down, which it can do, but I want to see it hold above that trend line. I want to see a little bit more conviction on Tuesday. Monday, the market's closed, Tuesday or Wednesday. And if I start to see that early and middle of next week, you're going to see a number of stocks and ETFs being added back to your portfolios. We have been holding an enormous amount of cash because of this, because of all of this, what I would call garbage. It just went way down and up and way down and up and way down and up. This is not tradable. This is a washing machine. So I wanted to break out of this, but then on Tuesday or Wednesday, I want to see that hold. And that will give me the confidence, and we're going to start using all of this cash that is just sitting in there, and we're going to get that exposed into the market in different ways. So I hope that makes some sense to you. I want to show for my pure Bitcoin buyers, and also for the new ones that are going to be coming into the structured product with the downside protection. If I go to Bitcoin, here's another. You can see this line that I drew that was kind of a downtrend. What we've seen here's the price of Bitcoin ETF today. That 3-day moving average just crossed back above the 20. That's strong. We crossed above that down-sloping trend line. That's strong. We had huge positive volume today. That is strong. We are building momentum in our this is another form of volume that I haven't really explained to you yet, called VSA volume. That's good. The OBV is clearly green. The MACD, which is momentum, just went above the zero line. So I love what I'm seeing with Bitcoin. I really love what I'm seeing with Bitcoin. The next level is we need to break above this previous high, which was right there. I've got this gray box in there. Once the price breaks above that gray box, there's nothing above it. The sky is kind of the limit. So we'll see what happens. But that's our next target. Our first one is I want to see a breakout from that downtrend. And the second one is I want to see a break to brand new highs, which hopefully will happen sometime next week. So this is great news for the folks who are invested in IBIT with me. This is the volatile one. And it's also great news for those of you who will be going into the downside protection ETF, because the faster Bitcoin goes up, the faster you have the ability to hit that cap, which I'll know exactly what that is on Tuesday, and I'll send that out to you. So they are correlated. Don't think they're not. They are very, very correlated. And I'm seeing nothing but bullishness on this Bitcoin chart. The The NASDAQ is a very similar story to what we've been seeing. That 3-day is just about to cross over the 20. I need to see a little bit more on the NASDAQ before I get totally comfortable. I'm not as comfortable on the NASDAQ as I am on the S&P, but we could just be a day or two away from those metrics changing. So that's a story. If you have any questions about anything that I've covered, please shoot me an email. I'll be in and out doing research all weekend, the 3-day weekend. I'll be here at my desk a lot. I'll be out on the water some, but I'll also be at my desk a lot doing a lot of research for next week. But all you got to do is shoot me an email, or you can hop on my scheduler. There was a little glitch in the scheduler for the last couple of days. I think that's fixed now. And I'm always available. So if you have a concern, if you have a question, if you want to know more about anything, just let me know. I need to know that. Okay, that's the story. Have a wonderful, wonderful weekend. And again, you can always reach me over the weekend. I never mind that at all to answer questions. And then I will be back with you early Tuesday morning for what could be a rather interesting week in the market. Okay, thanks, guys, and I'll talk to you soon. Bye-bye.